Welcome to the Latin Wealth Podcast, a podcast dedicated to educating the Latino community about entrepreneurship, investing, and business.
Yo, what's going on, Latin Wealth family? Welcome to another episode to Wealth Wednesday. And this is your first time tuning in. This is a show where we come on every single Wednesday and we talk about trending news, trending topics from a Latino's perspective. And the reason why we did this and decided to create this show, in addition to the Friday interviews that we put out, is because, let's be honest, if you turn on the TV, you turn on the news outlet, you go on social, typically the people that are talking about this information, they do not look like us. I'm willing to bet my last dollar that they don't look like us. So it was important for us to come to our community and, Jeremiah and I have different backgrounds and present you guys with this information, right? Especially from Latinos that look like y'all, that come from where you guys come from and, talk how you guys talk, right? And have been through what you guys been through. And we just want to make it as relatable as possible for you guys so you can actually apply the information that we're talking about on here. So Wealth Wednesday, thank you for tuning in. Also, I mentioned the Friday interviews. We've been putting those out pretty consistently. If you have not checked out last week, I would highly recommend you go check that one out. We had a fellow Boricua artist on, and it was a pretty dope conversation. Just diving into his mindset, up and coming artist, and also an entrepreneur. We always look at some of these musicians or even different artists and whatnot, and we just kind of assume that they get paid somehow, but we don't know how it happens, right? We don't know the work that goes into, them being able to sustain their career. So had a dope conversation with this interview or with this individual on the interview, and go ahead and check that episode out. And with all that being said, enough of me talking. We're gonna dive into these dope episodes or these dope conversations today. Jeremiah, what's going on, bro? How you feeling today?
Feeling good, man. It's good to be back. Phenomenal episode last week. Sitting there taking notes
Yeah,
on both sides, man. I saw you asking wonderful questions, and it was just a great episode. Fully appreciative with Toby, but it's good to be back, man.
yeah, for sure. And the episode that he's referring to is last Wealth Wednesday's episode, which another look, we've been putting out this content just trying to give you guys value. So Wealth Wednesday last week, we had Toby on for part two, talking about how you can leverage your credit to buy different businesses. And last week, we spent pretty much the whole episode on building your business credit and how you can leverage that again to, elevate your business, purchase businesses, and just do different things, create additional streams of income. So if you want to check out that episode as well, feel free to do that. But yes, glad to have you back. We missed you on that episode. And speaking about being back, I just came back from Puerto Rico with my wife. We'll quickly dive into this and we'll get into the topics. But yeah, I had a phenomenal time in the homeland, the motherland. And man, I was telling Jeremiah every time the this is the second time I've been back. And every time I've been back, I almost feel honored to be back on that land and just to
Sure.
just be on this soil that my ancestors were on, and just going to the beaches, going to the waterfalls, and just driving around. um Man, it was, I don't know, man, I don't think words can describe how you feel going back to your homeland. Like it's just a different vibe, you know what I'm saying, different feeling.
Always, I think it's like, well, for me it is home, right?
Right.
But it's I wanted to ask you, did it feel homely? Like you feel at rest, like honored, but like does your soul just kind of like feels at rest, like you just belong there.
Bro, 100%. And it kind of gave me the chills when you said that, because it does. And I had a conversation with, speaking about artists, way back in the days, I had a Puerto Rican artist on one of my podcasts. It was like before the pandemic, and she's from Puerto Rico. And was having a conversation with her, and she's like, "Yo, every time I go back, the best way I can describe going back to Puerto Rico is like when you get off that plane, it's just like a warm hug.
Mm,
Like it's just that's and I'm like, I've took that analogy ever since then, and that's the truth.
yeah.
Because like a warm hug from your grandma or your mother or someone that you love, like you belong here, you're supposed to be here. And we miss you. Welcome home.
And I feel like, I mean, you and I talk about it, but I don't know where you're gonna retire. But I tell you all the time, like as far as me and when I'm gonna retire, that's where I'm retiring.
Hmm. Hmm.
Me and my wife, we said we want to go there, maybe have a home in the country, have a home in the city as well, because I'm a city guy there, but
Hmm.
just, enjoying the land. And then just like really getting to enjoy the culture. I mean, there's
Hmm.
nothing like Boricua culture. I don't think anywhere in the world. By the
Hmm.
way, shouts out to us, bro, because we were voted the perfect human. I don't know if people read that. You look it up, go look on Google.
That's what they
Said Puerto
said.
Ricans, but I'm
I'll
only
take
telling
it.
the truth. That's all. But no, man, it's to go to the beautiful beaches, to be able to experience the
Hmm.
culture. Just walking through the streets, you're going to experience the culture. You see years and centuries of architect. You see
Hmm.
the coming together and the melting pot that makes us Boricua, right? Which is three different groups of people. You have the natives, you have the African, you have the Spanish people. You see it all come together in a beautiful melting pot, and that's what it is. And I was looking at your pictures and stuff, and I was like, man, this dude is happy. I saw you on the beach, and I was
Yeah,
like,
man,
man,
it
I
was
know he
great.
is so relaxed right now.
Yeah,
And I was like, yeah, it's about time for me to book my trip.
book your trip. And the people listening may not know, but I actually met up with Brandon out there.
Oh, word.
Yeah, Brandon. So one of our friends, Jeremiah and I's friend, he lives on the city, the east side of the island, and I went to the west side. And he drove 2 hours and was hanging out with us. And first thing he said was, "Welcome home, bro."
Welcome
That's what he told
home.
me. So no, it was great to, and the people there, phenomenal, great people. You just
Yeah,
go to the beach and they ask you how you doing, where you from,
yeah.
you enjoying yourself? Have you went here? Have you tried this? And yeah, man, it was just like it's dope. And obviously the west side and the east side is just like two different parts of the
Yeah.
island, man. Like
Oh, for sure.
it's a lot slower. I'm used to Dallas driving 80 miles an hour. The speed limit 45.
Yeah.
I gotta
Yep.
relax out here, man. You gotta chill, take it easy, you know what I'm saying,
Yep.
and just be in the moment, enjoy your surroundings.
Did you get to go to any of the actual natural sites, the caves with the faces and everything? Did you get a chance to visit
We
any of
didn't
that?
get to do that. We did go to a waterfall
Okay.
that was like I forgot the name of it, but it was like in the mountains, bro. Like, we had our little Toyota Corolla. We was going up these
You
little windy roads,
through the
man.
winding,
It was
yeah,
crazy, but we went up there and man, it was just peaceful up there.
it's
I was
good for the
surprised. My
soul.
wife was like, out of everything we did, that was like her favorite thing was going up the road and going to that waterfall, which is peaceful.
It's the little things, man. It puts
Yeah,
it puts the soul at peace. And then
yeah,
you came back fully recharged a little
fully
bit before the
recharged.
beginning of the year, right?
Yeah,
So it's like it ends the year on a peaceful note and gets you ready and recharged to
for
start
sure.
2024 like on a whole elevated level.
Yeah, yeah,
That's
100%.
what's up.
So definitely had a great time out there. Speaking about recharging and getting ready for 2024, jumping into our topics, lower interest rates are coming, and we want to dive into what this means for you guys, what this means for your money and whatnot. So interest rates are higher than they've been since more than 20 years, right? It's been a
20 years.
historic run with the interest rate hikes by the feds.
Mhm.
But they're at a place where they want to kind of cool off and, help with the inflation. And so the feds predict that there's going to be three interest rate cuts in 2024, which is pretty crazy to think about. It's going to be very interesting to see what's going to be the results of these cuts. Before we jump into that, Jeremiah, what are your thoughts about this, man?
Well, obviously, after doing 11 hikes,
Yeah,
three cuts sounds really good, right? Um, and obviously, it'll stimulate the economy. You'll have people that'll get back in the house market. All right, the housing market right now has been hurt significantly. Housing prices have appreciated. The interest rate was so high, you couldn't afford to finance money, right, to actually go and purchase the home. So I could see homes, some things switching up. Maybe if supply and demand levels out, so you'll start to see that getting a little bit better probably. But at the same time, it has to kind of be managed. I think expectations have to be managed. In 2021, you could purchase a home for about 2.9% interest, right? Which is really low. It's a great deal.
Mm,
Everyone that took advantage of that or were refinancing and everything worked out really, really good for them. If you didn't, not so much, right? Um, I don't think we'll ever see back down in the twos.
mhm.
I don't know. You may have a great deal or something, but I think the norm now for interest rates are just going to be at about anywhere between 4 to 5%, a little bit above five.
Mhm.
So still much better than where we were at with 8%. But I feel like we have to manage that and just how the money we get too, because if we could start spending all over again,
Mhm.
the Fed starts hiking the rates back up again because they have to cool the economy. So yeah.
So my thoughts on this is if they slash the interest rate,
Hmm.
I would think the prices of, like you said, supply and demand. So if interest
Hmm.
rates goes up or they're slashed, then you're going to see more people jump into the housing market, more people jump into the housing market. Then I would assume that there's going to be a price increase, right? Because there's going to be the demand is going to be
Exactly.
there.
Exactly.
Could you argue not only housing prices, but like just everyday goods going up in prices as well, even though they are already high as it is? Like, can you see
I mean,
groceries and stuff going up even more?
well, I think you'll have a cut in groceries. I've already seen it. I've seen them go down quite a considerable bit. Groceries and utilities are two of the factors that they don't actually factor into the, if we said that, oh, we're in inflation, they actually exclude those from inflation because they're so volatile.
Mm,
So
okay,
when
that's
you
fair.
start to see cuts in groceries, eggs, meat, stuff like that going down, cereal, right? And then your gas, electricity per kilowatt, when you start to see that come down, then you're probably headed in the right direction. But I can see, I can see the houses part coming down. So it's like a seesaw, right? In a balance. But like you said, they'll lower the interest rate. People rush back into the housing market, so people start raising the prices of houses. It's still better than now because you got a lower interest rate, so
True,
it
true.
still makes more sense. But at the same time, what if they double the price that it is now? Well, then the lower interest rate won't even really matter. And that's what we've seen in years past. So that's why I said it's kind of a catch 22 kind of.
Hmm.
You really just have to see which way they're going, which direction.
Do you see gas prices coming down in California?
I do
Okay,
actually. Um, Probably about a month and a half ago, we were at a little bit under $6.
that's
I
freaking
just I
nuts.
just put gas the yesterday and it was 3.89. We haven't seen the threes in
Damn.
4 or 5 years, maybe, since I've been here. Like I think when I first moved, it was 390 or something like that. But like, yeah. So I can see it coming down. And I know if it's coming down in California, it's coming down
Bro,
everywhere
you don't
else.
want to know how much it is out here.
$2.
Close. Regular and I think the lowest I've seen was like 224,
Yep.
which is nuts.
I used to always make fun of it because, I lived in Texas freaking
Yeah.
20 years. And I used to just sit and be like, oh man, I can't even imagine. And then I'm here and I'm like, this is what I imagined.
Yeah,
Like,
yeah. It's
this is exactly like I imagined.
anywhere from 224 to 250, depending on where you go.
And that's solid. It's going to be in the ones probably very soon. Barrel of oil, those things have been cut. So when you start to see utilities and those prices, those are indicators that the economy is trying to level itself out. But you'll always have someone be greedy, right? And the
Yeah,
housing market
for
is
sure.
so volatile.
Yeah.
So yeah,
It's
we'll see.
interesting. So the one of the reasons why is they're slashing interest rate is because of the inflation rate, right? Does that have something to
Correct.
do with it? So right now it's sitting at 3.1% basically. Last year was 7%. They want to get it around 2%.
Yeah.
Is the reason why they want to get it around 2% is because a little inflation, does that show signs of growth in the economy?
That just allows the dollar to remain strong.
Okay.
What ends up happening when inflation goes, the value of the dollar decreases. So right now, if you compare, not to get super technical, but if you compare the dollar versus the British pound, right? British pound, it would take like $1.50 to equal
Mhm.
one British pound, right?
Yeah.
The
Yeah.
euro is like $1.30 to equal 1 euro. And so it's just understanding how the actual economy works. So macro on the big scale, you want the dollar to be a staple that it's been. You want it to be the standard essentially. And the way you get back to that is making the dollar stronger. So as you see that exchange rate between very strong currencies and the dollar lower to where like the dollar, it's a 1-to-1. Because if it's 1-to-1 across the board, the dollar, the pound, euro, that I mean that probably won't happen. But if it was 1-to-1 all the way across the board, the dollar is very strong.
Mhm.
So that's, I mean,
Have
that's
you
the thought.
ever have you ever seen or been in a time where they slashed interest rate 3 times in 1 year? And what was the results during in that 1 year?
Uh hmm.
Or even two? Is something comparable?
Yeah. So you could look at the back end or the tail end of the recession,
Hmm.
right? Like 2010, 2011. And then
Hmm.
you saw it kind of getting better in 12. This is people like, dude, I was only like fifth grade. I understand. But in 2008, obviously there was a there was a huge recession that was started. Subprime lending, stuff like that, right? Get into that. But yeah, that's the last time I saw it happen. And what ended up happening is it did boost the economy, but that was after such a it was a low.
Hmm.
We're not at that place yet. It's tracking, but we haven't officially hit numbers like that yet. So it's very hard to it's very different or difficult to say how things work because one thing
Yeah.
that people don't think about is that this is a generation. 2008 was 15 years ago, almost 16. There's a whole generation of children that grew up that were like
Yeah.
6 or 7 then. They're now in their 20s. They're now the young adults that are in the workforce and making decisions and right. And so it's a different mindset than say myself, who was just getting out of college. It's a different generation. And so the thought process of that generation, this generation that's coming up is all digital.
Hmm.
I was still analog partly, right? And so the way you think about handling money, the way I think about savings, the way all that's completely different. And so you can compare it to 2009, 10, right? But it's going to be different because the
Hmm.
people spending the money is different.
True. Very, very true. So, I mean, the reason why, correct me if I'm wrong, that the reason why they want to slash interest rate is they want to help out, yes, interest rate is because they want to help
Mhm,
out the economy.
mhm.
Um, And I guess it's more like a domino effect, right? So they're hoping, people can get back in the housing market. They're
Right.
hoping that credit card rates can go down so that can
Yeah.
help out with people paying that back.
Yeah.
Um, which I guess somewhere down the line, does that help out the job market as well?
Oh, I mean, the job market has actually been doing really well.
Hmm.
If you look throughout this whole entire time, the job market hasn't suffered. It's been doing great. The problem is there's tiers to jobs, right? So the primary sector are your white collar um, financial job, right? Like the white
Hmm.
collar, you don't sweat it all, right? You're in the
Right.
office, you're C-suite and high managers, right? Then you have the secondary sector, right? Which are people that are just coming in. It might be supervisors and down, right? And then the tertiary level is service, cleaning up parks, plumbers, garbage men, even McDonald's, stuff like right that level. And so the problem is the numbers were kind of skewed with the jobs. You see less jobs or you see more jobs added monthly. That's what they always reported, but it was in the tertiary sector. And so what ended up suffering was the middle class and upper middle class people, and that's why you start to see more credit card defaults. We went over
Hmm.
$1 trillion in credit card debt, and so they're looking to try to see if this stimulation of the economy will make money cheaper to borrow, easier to borrow. Banks pull back a little bit, credit cards pull back a little bit, and so instead of the $120 that you pay monthly towards your credit card and 80 of it going to interest, maybe only 40 of it will go to interest. And so you start to pay it back and you feel more comfortable putting that money towards that. It's all like you said, it's a domino effect
Yeah.
across the board.
So I think the reason why it was easy just to say like, oh, the job market isn't doing well because you hear and you see the headlines of
Yeah.
these tech sectors laying off 10%
Yeah.
of their workforce.
Yeah. I mean, but that's like I said, that's secondary and primary, right? Those are sectors of middle class to upper middle class. These guys, I mean, the bottom level at these companies are making $100,000.
Mm-hmm.
It's just different, right? It's different sectors. And so you may see that and excuse it, but then you'll look at another report in Yahoo and it says we added record number of jobs in November or September, right? And it was all because it was all the tertiary. And so
Mm-hmm.
you gotta kind of, what do I always say? Do you do due diligence and look in the background and see what's actually moving, who's stating what, and why the narrative that they're pushing in that direction.
Yeah, 100%. No, it's going to be very interesting to see. Like, I'm going to be very interested, and we're going to be paying attention to what happens in 2024 when
Oh, for
if they
sure.
do cut these interest rate and see what's
It's
going to, yeah,
2020. I was just gonna say 2024 is gonna be the most interesting year in the past decade.
yeah,
Mark my word. If you're not, I would say get your finances together. Make sure that you have a plan because there's so much that's changing and so much that's at stake. It's a presidential election year.
hmm
So there's certain things that wouldn't go normally that's going to
for
go.
sure.
People trying to make things look better, numbers look. There's a whole bunch of stuff going on in 2024, along with the economy. So I would say people need to be prepared. That's
hmm
that's what I would say. It's probably going to be a monumental year.
hmm
It could be good or bad. It
Yeah,
depends, right?
no, 100%. I agree. It's going to be very interesting. Something else that was interesting that popped up on our radar is Costco. I think everybody loves Costco.
I mean, it's
Um,
linked to the story that you just talked about. Interest
yeah,
rate. I mean that those two are actually linked.
yeah, 100%. And so what
Yeah.
we're talking about is Costco, they show resilience with their company with a $15 dividend payout per stock. So
Jeez.
I don't know, maybe 5 episodes ago, we spoke about what dividends are and how you can implement it in your investing strategy.
Right.
They are paying out $15
That's crazy.
per share.
That's
As we
crazy.
said in that episode, dividend is basically like a bonus for the shareholder. Hey,
Right.
thank you for investing in our company. Here's $15 per share that you have with stock or with Costco,
Right.
which is unbelievable. It's crazy because before we hit record, usually you hear about dividends, $3 per share,
Yeah.
$4. Oh my gosh, that's huge. That's crazy. But we got $15, right? So they announced that they are doing a special dividends of $15 a share, and they beat profit expectations in the fourth quarter. And yeah, this is the first special dividend since late 2020. Back then, investors got even $10 a share, which was
It was
crazy as
big.
well.
Yeah.
Currently, the Costco stock price is at last time I checked was at $681, which
Mhm.
is an all-time high right now. And it's pretty crazy. Some of the things, like once you start digging into Costco and what they're doing, one of the reasons why they ended the year so well was not because of the hot dogs, not because of the pizza,
The pizza.
um, but they started selling gold.
Yeah.
They started selling gold
Yeah.
online to only their members last quarter. They were pretty much limiting their members with two per member limits, and they sold about $100 million in gold,
Yeah.
which, man, like this, shout out to Costco because
Shout out to
that's
Costco.
insane. I mean, I gotta be, I want to be in that room. Whoever threw out that idea, like let's
Sure.
sell gold to our members.
Yeah.
It's incredible
I think but that's only the first part of the strategy, right? So this is a 2 to 3 part strategy.
for
Obviously, you
sure.
sell gold. That's going to build up the books, right? Positive cash contributions, right? And then what do? You tell people that you're going to give them $15 per share, and no
hmm
matter if you're at an all-time high, people go and purchase the shares knowingly, right? So they can
hmm
get that $15 of dividend because dividends create passive income for a lot of people. And so it's a 2 to 3 step plan that they played out, and it's well played.
Well played.
Whoever came up with it, phenomenal idea. And I can see Costco beginning to, and what you'll look to see in 2024 is them purchasing other companies. They'll
hmm
start they start to purchase things like,
Mhm.
I don't know, Sam's Club, which is
That was the first
the
one that came to
competitor.
mind. Yeah.
Like that's the first thing I can think of. We're gonna amass a massive amount of cash influx, and we're gonna buy Sam's, and now
Imagine
they'll all be
that.
the Costco's.
Man,
Um,
imagine that'd be
you're
fun.
right. And that's, I mean, because that's essentially Walmart did the same thing to Kmart, right? So
Yeah.
that's what I'm saying. You gotta like, they're strategically lining things up. I want to see in 2024 what those steps lead to, because they're building up for a lot of money, a lot of cash on hand. That either means they're investing in a company, or they're looking to purchase something, or they've already purchased it and have to pay. They have some terms to pay it back or whatever to pay it out. So
Yeah.
we'll see.
Yeah, and it's interesting because digging a little deeper into how Costco makes their money, they actually make little profit from their sales, right? Their gross margin on merchandise was only 11%
It's low.
in
Yeah.
2023.
Yep.
But where they make up all their money is they have 72 million members as of Q1.
Yep.
And this is the craziest number of them all. They have a 90% membership renewal rate. 90%. So that means damn near everybody renewing their Costco membership. I mean, I don't know anybody that just cancels their membership. They keep that thing going.
No, 100%. And I think so. You see the same model being copied by Tesla. And you sent me something, and we were like, "Man, this is crazy." Won't even get
Yeah.
into that. That's a whole
Yeah.
other conversation. But yeah, you see the same thing happen with Tesla, right? Where um, they cut prices, low profit margin, but want to build by volume. It's not the same industry, doesn't
Mhm.
work that way. We haven't really seen it working like that. But you see multiple different industries and companies trying to do the same thing. They have, 72, what is it? You said 72 million
72
subscribers,
million members.
right?
Mhm.
And even if I just increase the membership fee by $1
A dollar.
across, right?
Yeah.
I've gotten what, $68 million because it's a 90%,
Yeah.
renewal. And so you just have to think about it. Like, it works in that type of stuff. That definitely
Mhm.
works. A profit margin of 11% anywhere else is almost death to a company.
Yeah. That's crazy. I didn't realize that. It reminds me of the first thing that comes to my mind is like I think McDonald's, they don't make money or profit on their hamburgers. They make it on their drinks or like the fries or you upselling you on the
Bro,
additional stuff.
McDonald's is a real estate company.
True. True. Very true.
McDonald's buys, they go and occupy a block and they buy the next 2 or 3 lots around it, and they sell it and make profit while they're making money off the fries and the sauces that they charge
Mhm.
you for now, right? So McDonald's is more of a real estate company than anything. Just something to throw
We do
out
a whole
there.
episode of McDonald's.
Hey, I'm just, maybe I shouldn't have said that, but yeah.
No, 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 no. You're right. I mean, McDonald's is if you think about like who was I having a conversation with? I was a conversation with my barber, Tommy,
Hmm.
and he's like, "Yeah, they just built in my town that he grew up in. They just built a
Hmm.
McDonald's 5 years ago." To me, that shows how
Wow.
far along or
Wow.
how far behind a city is when
Wow.
they just added a McDonald's. Just because, like you said, it's a real estate companies are everywhere. So if they just added that to that town, I mean that tells you enough that you need to know about that town.
I feel like that, there's certain staples in a city that dictates their progression as they're growing, and they end up growing into a metropolitan area eventually, right? Which is 50,000 people or more. And you can see it, right? Those signs are usually, you got, so normally, right, it's a hospital, schools, those
Mm-hmm.
staple things. But then it's actually in retail, it's McDonald's,
Mm-hmm.
there is Walmart,
Mm-hmm.
right, which is a necessity.
Yep.
Then you're usually going to get a Target and like gas stations.
Gas
When you
station.
start to see like and it's weird, you'll see that stuff, and literally the city starts to, or the town just starts to
Yeah.
grow, grow, grow. So
And
that's an indicator.
those strategically place at Target or Walmart in certain areas.
Always, always.
Yeah.
Yeah, because they look at the demographics of people moving in an area, right? And they'll time it perfectly to go get the cheap land, build it, and then double the profits.
Mm-hmm.
Smart.
Very smart. But yes, that's Costco. Not to get off topic too much.
No, it all and it's related to the first article though.
100%.
People don't get it.
Yep.
It's actually related. The reason why, not only just the goal, but the reason why people were even interested in Costco is because of inflation and volatility in the grocery prices. So you say, I want to save money in bulk. I want to buy more at a cheaper price, which lends you to Sam's Club or BJ's or Costco.
Mm-hmm. You said BJ's?
Yeah,
What's that?
it's a store just like it's not as big as
As
Sam's
okay.
and
When you
Costco. Yeah.
when you said, I mean, Costco making a big play like purchasing Sam's Club. I mean, I can't think of a third competitor.
BJ's, but they're so far behind. It's not
Yeah,
even. Yeah, it's not mentionable. It's just Sam's and Costco.
Costco. Yeah, it makes sense. Dope. With that being said, another episode to Wealth Wednesday. If you found any value from anything we said, and we said a whole lot in this episode, come on now. Share this episode with one other person that needs to hear the Latin Wealth platform, that needs to hear this podcast. Again, we're coming from the Latino community, giving you guys this information. You guys let us know who else is doing this on a consistent basis like this. With that being said, it's the Latin Wealth family. We'll catch you guys next week. Peace.
These guys.